In this episode, we're going back to the very foundation of Warren Buffett and Charlie Munger's investing principles because we are going to start talking more about the four principles that we follow, the circle of competence and the competitive advantage, also called moat, the management, and digging into what are some important parameters to look at when we're looking at management, and last, margin of safety. So today in this episode, we're going to dive into the very fundamental principle of circle of competence. What is it? Why is it so important that we as investors follow these principles before we buy stocks at all? And you're listening to Investing Mastermind Podcast. My name is Signe Lundholt.
And I'm Michelle Markey.
So for this episode, we're going back to the foundation, right, Michelle? It's like,
Yep.
one of the very fundamental parts of Warren Buffett's strategy, the circle of competence. When you would describe it to someone, what would you say circle of competence is?
Well, in some ways, we can think of it as the meaning. So, what does a given company mean to us? For example, when I was a teenager, I worked at Starbucks and I got to learn a lot about the coffee business and about corporate culture and the way that Starbucks runs its business as a publicly traded company. And that has given a lot of meaning of Starbucks to me. Like, I still enjoy their coffee. I prefer them over Dunkin' Donuts. Sorry, Dunkin'. And it gives me some meaning and basis for which to understand this business and for me to want to still be an investor in the Starbucks company. So, having grown up with that as an impressionable teenager, I derived a lot of meaning from the coffee business. So, that's something that we can learn about, whether we're exposed to a company through our work, like I was, or it's just something you're naturally interested in, such as you're very interested in makeup, right, Sina?
Yes, I am. And nails and makeup and all that good stuff. I used to work for also, a magazine like similar to Cosmopolitan. I just got out of journalism school. So I have a passion for that. And so what you're also saying, Michelle, is to find something that you have some experience in or that you're really passionate about. And to relate it to stocks and the stock market, because what Michelle is also saying is that when you want to start buying your first stock, it can be incredibly difficult finding out, okay, so what should I invest in? There's all these companies out there and all these stocks, and maybe you're not quite sure about what to invest in. And it's a good idea to stay within your circle of competence. And as you mentioned, Michelle, you worked for Starbucks, so you have some knowledge about Starbucks. I love makeup. I used to work for a magazine, and from that side of things, that's where I know something about makeup and about how it's also being sold and how ads are made and things like that for a magazine and all that good stuff. So that's kind of why we start with circle of competence. Is also because as a new investor or as an investor, the first thing you need is some ideas on what to invest in. So if you had some good advice to someone who may be starting now, or even a seasoned investor that needed to maybe go get some more ideas on what could I invest in, what would you tell them?
Well, think about your everyday hobbies, some of the things you just enjoy doing. Like maybe you're really into home improvement, like you enjoy fixing up your house. So maybe you tend to go to Home Depot or Lowe's a lot. And those are publicly traded companies. So if you appreciate and value their products and you think they offer a good service, those could be within your circle of competence that you could be capable of understanding how some of these home improvement stores work. And that's right up your alley because you're always fixing up your house. That could be something within your circle of competence, and it might have enough meaning to you that you actually care to learn about it because it's something you're doing in your free time.
Exactly. And now, Michelle, you're talking about home improvement, some you're doing and stuff like that. And people might be thinking, okay, but that kind of sounds boring. I thought investing was about predicting the future, which sectors are going to be important in the future. Are cars going to, fly? What fuel will they, like investing in some of these sectors that's going to grow? That's something that I actually often hear, is that when I talk to people and ask them, how would you find, something to invest in? People are all like, I think even though, they're talking a lot about oil, I really think there's something about green energy still. So people start talking about what they think is going to be important in the future and trying to predict in the future, maybe within categories that they have absolutely no idea, right?
Yeah.
About, you're talking about if you'd like to improve your house, then maybe you know some tools, or you go shop at a certain place and maybe you can buy stocks in some of that. But what people do is trying to predict the future. Have you ever either done that yourself or heard about that, or?
Yeah, when I was younger, I didn't know much either. And like I would think about what's a possibly good futuristic investment too. Like we all are tempted by what we think could be the future. Like a lot of people did that with Yahoo in the dot-com bubble. They thought that Yahoo was the next biggest thing. But Yahoo would need to make up a really big majority of our GDP or something like that to have delivered on the value that it was being traded at in the stock market. So you might think back in the 1990s or around 2000, if you thought Yahoo was the next big future thing and AOL, and you put a lot of money into them thinking they were going to be the end all be all, like sadly, it didn't work out for those companies because they couldn't deliver on whatever the value is that they're supposedly offering, which in hindsight was not all that much in retrospect, right? If someone would have instead invested in Microsoft, even though it also had a lot of up and downs with the dot-com bubble, but Microsoft has been consistently delivering a lot of value ever since, unlike AOL or Yahoo in a similar manner. So you can see that some of these names that people thought were so futuristic and such a big thing ended up not being so. But the key is to not try to predict what's going to happen in the future, but to truly understand a business and understand what is the value proposition and to measure that against some metrics that we'll also talk about in the future, but they include return on invested capital and return on equity and how much long-term debt do they have. Like there are so many metrics that we can use to judge a company over several years to try to get at a better estimation of how a company will do. It's not super predicting how they will do, but based on a track record of 10, 15 years, trying to assess, do they seem like they're still on track? And also reading a lot of artifacts about a company, like the CEO's letter to shareholders, trying to assess, will this be a company that can continue performing at the rate it had been, either better or worse? Or like, what do you think the somewhat near future has in store for a company you're interested in investing in?
Yeah, and that can feel a lot to start to look at right now, but don't worry, we'll take you by the hand and show you what to look at, like Michelle mentioned. So the thing is that I thought also was really interesting about what you were talking about, Michelle, was that, yeah, people were trying to predict what is the next, back in the day, it was internet stock, right? And today it's like, what is going to be the next AI stock? Instead of investing in something super boring, like the power tools they use for putting in a new wall or doing some home improvements or whatever, like for myself within the makeup, buying a new makeup tool that I can use and I know is really good quality and I really enjoy to use. So that are things that people are buying today and purchasing today. So we don't have to predict the future because it's already selling. And those things out in the future, they might actually not transpire into anything. And we see it time and time again, that just a few years ago, everybody was talking about health and how there would be an epidemic of overweight people. And that just, it never happened. We have a ton of different medicines and different kinds of prescriptions today that people can get. So it will never happen. Actually, at the moment, I have one of my clients that's doing my program. She's working for, it's a nonprofit, but all they do is predict the future. It's a very, very successful nonprofit, and their mission is to actually educate companies about what is going to happen in the future. And what we discussed and what she told me is, well, even us, we're experts and people maybe think that we can predict the future, but we can actually only see about a year out in the future. And we can't even sometimes see a year because then something happens, like one of those black swan events, like the pandemic that all of a sudden happens and nobody could have predicted it. And so, of course, they look at some of the trends and some things are more predictable than others. But what she says is she totally agrees, which was great because I thought, oh, now I'm going to have to convince this person who works in this space of predicting the future. Now I'm going to have to convince her not to do that. And she was 100% on board because she was like, well, you're talking my language. I agree.
Yeah, and sometimes it can be hard to truly know as an investor. We're on the outside. It's not like you're in the inner workings of a company to truly know how they're doing. And even some of the people who work inside a company can't fully know. Like all the workers don't have access to the exact financial performance of a given company all the time. But you just try to do the best you can with some of the quarterly filings that a company puts out. So by learning about a company's 13F filing and some of the quarterly filings that come out, you can get an idea of what a company's performance recently has been. And you try to just form your own sense of analysis based on the patterns that a company has been showing. And you have to be a judge of can they continue this or not. But I know that's going down a little bit more into once you've actually decided on a company you're wanting to learn about. So the circle of competence is both a combination of interest, like are you actually interested in this company? Because there's no point in learning about something that doesn't really appeal to you. Like, for example, I have one of my friends invested in Duluth Trading Company, I think, and it's like a clothing store, mostly for men. But that doesn't really appeal to me because I don't shop there. So I'm not interested in trying to invest in Duluth just because it's not really something I go to, or my husband also doesn't usually get clothes from there. So even though it might be of interest to one of my friends, that's great for them if that's a business they want to invest in, but it doesn't stand out to me. So you have to really be interested in something to learn more about it.
Yeah, I absolutely agree. And that is a core thing that I have stocks, businesses, companies that I know because the knowledge I have, I know that they're wonderful businesses, which is a concept that Warren Buffett talks about and that we're going to talk more about in a later episode. But I have stocks that I know that would be good investments, but I'm not interested. If I would have to go and find out many, many things about this business, but I just don't have the energy about it. So then it's a pass for me. But things that I'm like you say that I'm passionate about or that I can relate to, even sometimes so I might hear someone who talks about a company and I go in and I just check through it. This be a good investment? And maybe I found out, oh yeah, this would be an amazing investment. And then I go to the website to read about it. And then sometimes, even though I don't know anything about the business, I can actually see, oh, these guys here, or these people here, they have a mission that's so nice and juicy. And I get all excited about reading about this, or wow, I love how they treat their people. I would love to know more about this company. So even though to begin with, it might have sounded like, probably not for me, sometimes I find out, oh, I'm looking forward to this because their mission is so powerful. Their mission I can really feel I want to be a part of that movement. It's back to that, you could call it conscious capitalism. When someone like me gets excited about your mission, it's usually because they have a like really ambitious and beautiful vision, and that's what's called the conscious capitalism. And there's some people that purely invest in businesses that are within that category where it's like, wow, they have a beautiful and very important mission. And that goes back to your values, which is such an important part of circle of competence as well. Like your values, what are some of your values? Is there something, Michelle, you want and feel comfortable sharing that you might be looking into when it comes to values in a company? And maybe there isn't. It's not for everybody.
Well, some of the values are ones that we were taught from learning about Warren Buffett and Berkshire Hathaway, like values where, say, a management prioritizes investing internally as opposed to trying to give out dividends or trying to do too many mergers and acquisitions that may or may not be to the benefit of a company. So I'd like to look for a company that has values similar to Berkshire Hathaway.
Yeah, that's a very good thing for me. So what I like to see is I would not invest in a company if I couldn't see diversity in the management group and in as well as in the board. And what I mean by that is I'm a woman. And when I started using Warren Buffett strategy, there was still a lot of boardrooms, still a lot of management teams where it was purely men. And there's nothing wrong with that. That can be super awesome. But as a woman, it is just a value of mine to kind of see some women in the management team where and I remember when I started working for the Lego Group, this is many, many years ago, and we had an amazing CEO. I just want to celebrate him because he is absolutely amazing. Jan V. Knudstorp. Jorgen Wieg, you would say in English. So when I first started, there was a huge corporate restructure and he came out with a new management team. And I just remember the day that that was announced and they had a picture, a photo of the new management team on the intranet. And it was all men. They were wearing the same white polo shirt, khakis or jeans and like a Tommy Hilfiger belt or something like that. They looked like they came out of the local business school. I remember being like, huh? Surprised and kind of, it didn't feel good. It felt wrong because we're not back to the 50s or anything like that. This was in the modern age. And so he actually also got quite a lot of heat in the news and internally for that. I really believe that he was shocked. He just didn't think about it. And what he did after, he created a lot of talent programs and things like that. So they would get a more diverse team and ensuring to actually hire people with different backgrounds and coming from all around the world and things like that. And I love to see that because when you get so many different perspectives into a team, I can tell you, my team at the Lego Group, I was very conscious about hiring a very, very diverse group of people because you get input and then you really grow, not only as a person, but also as a company. That's my belief. It is my belief, and I could be wrong, but that's something that I value and where I potentially, if I would see something that went against my values, I would not invest in that company. And I have other values as well, but that is definitely one thing where I can say, okay, I'm not going to invest in this business because I just don't see, and it doesn't even have to be values. It could just be actually a risk if the whole management team comes from the same university, like if all of them are from the same university, as well as the board, if kind of they're too close, that can be a risk because it's the board that hires and fires a CEO. And if they're friends and went to the same university and the same fraternity or sorority, can they actually fire that person? So it's also a risk to have a group that's too homogenous.
Yeah, and that's a great tie into the idea that you want to have your values be part of your circle of competence. So, namely, that you're capable of understanding the company. And you were clearly able to understand how the Lego business works and how it's made up of people and its values that either align with your values or they don't align. So that's all part of, are you capable of understanding the business? Because if you don't understand their values, it's harder for you to relate and want to believe in the company. So that's a great tie into circle of competence. And that's great that you picked up on that.
Yeah. So I think we've kind of covered not in great detail, but hopefully you guys understand the concept. Don't try to predict the future. It's as boring as trying to find something that you're passionate about, and which is not boring at all because you're already passionate about it. And then you could add that little thing about values. It's not for everybody, and that is totally cool. But if there's something, you could add that part also to your circle of competence that connected to your values. So we have covered the topic for today. Michelle, do you want to talk about what we're going to talk about next time? And hopefully you guys, you want to join and listen to this very exciting topic that we're going to cover in the next episode.
For sure. And what you were just also touching on with your values on management is what we'll talk more about next time when we delve a little deeper into management. So that was a great segue, Signe.
Yeah, that's right. We will dig into management next time. So again, we'll take you all through what we would do if we were to invest in a stock. And we'll see you in 2 weeks.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.